Mike, good to see you, brother. How you doing? Your first one in today. T, good to see you. So how you doing, brother? Hello, Miles. CMF Scott, good to see you. So how you doing? Pablo, good to see you. So how you doing? Hey, brother Miles, CMF. Comatose, good to see you. So how you doing? How's things, bro? X is fixed. I can like and retweet. Yep, X is definitely fixed with Restream. Everybody can like and retweet the live shows just like we used to. Good evening, all. JP, good to see you. How you doing, brother? Share the live. Let's go, Scott. Okay, let's do intro disclaimer, and then by that time, everyone should be tuned in for the first part of the live show. But yep, X is fixed, which means everybody can like and retweet the live show just like as we did before. So, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations, pretty much everything you need to know about regarding the world completely transforming into a digital space. We also do Q&As in this live as well, which means if you do have any questions, put it down in the comment section. More than happy to help you out. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. This is episode 448 of the CMF live show. Everyone's watching right now. If you have already liked and retweeted this live show on X, if you're watching this on X, thank you so much. If you haven't, CMF members, like and retweet the live show on X, just like we used to back in the day, because it's fixed now, so everybody can like the live show. And also, if you watch this on YouTube and you've liked the live show, thank you so much. And if you haven't, like the live show as well, and put comments outside the live. Now, on tonight's live, there's quite a big of a mixture of news to go through. The markets are doing exceptionally well, you could pretty much say, after all the downside pressure that we've been experiencing in the past weeks, you could say. But we're going to talk about what has actually happened, what is, spicing up the market space to go on this mini rally, you could pretty much say. We're also going to be talking about tonight's live show, essentially on some sort of international-based news as well. There's a few things happening in Hong Kong we should know about. There's a few things happening in South Korea. There's a few things happening in the UK, and there's a few things happening in the US. It's all relatable to the crypto sector. So we're going to go through that essentially segment of the news as well on tonight's live. We're also going to be talking about on tonight's live regarding essentially Russia as well and Ripple, as always. As always, Ripple needs to go through on tonight's live, on this live show, essentially Monday to Friday. Now, the first news we are going to be covering is regarding Bitcoin, Ethereum, and XRP, and essentially what is happening during this rally right now. Before we talk about that, let's go inside the comment section first. Let's see what's happening there, and then straight into the first news. So let's see where we're at. We were here, I think. Share the live, Scott. Good to see you. How you doing? Definitely. Let's go, Scott, for saying share the live. Good evening, Miles. Adi, good to see you. How you doing? Check out Miles' Substacks, another good one today. Let's go. Thank you so much, Scott, for saying that. As you may know, if you don't know, I do Substacks essentially daily. I release one article on Substacks, which is completely free for everyone to go check it out. I release one article on Substacks at 11:30 essentially p.m. UK time, which is around 7:30 a.m. Eastern time for the US. If you haven't, go check them out. Obviously not right now after this live show. And yeah, it's definitely a good read. I share the news and I share my perspective underneath it. It's a new concept that nobody's ever done before. I'm the first one to do it. Good evening, Miles. The CMF Bull XRP. Good to see how you're doing. I can't repost today. I can repost today. Let's go. Let's go, Scott. Everyone like and retweet CMF. Let's go, T, for saying that. Hi, Miles of CMF. Peg, good to see you. How you doing? What up, Miles, and what up, CMF? Hope all is well. Let's go, Ray. How you doing, brother? Are we still expecting a market dump, Miles? Good question. Are we still expecting the market to go on the downside? It's an outcome. And I know today everybody's very, very happy the market's up. I'm happy too that the market is up finally from all the downside we've been experiencing. It's a good feeling when the market goes up. Is it going to stay up is the main question. So on your question of are we still expecting the market to dump, Miles, there is still a possibility of a market dump, but it is going to be a final dump that we should have experienced, but we still haven't experienced, is according to some analysts. But we've also got to factor in the war scenario as well. But let me explain to you what happened and why we're experiencing some sort of a market rally, you could pretty much say. Bitcoin, Ethereum, and XRP lead a broad market rally as bullish sentiment returns, essentially is what the headlines are today. The cryptocurrency market is experiencing a significant upside today, with Bitcoin, Ethereum, and XRP spearheading a broad based rally. The surge essentially is being attributed to a combination of favorable macroeconomic data and a shift in investor sentiment. Following a period essentially of consolidation, as Bitcoin nears key resistance levels, the increased buying pressure essentially across major altcoins suggests that the capital is rotating back into digital asset spaces, driven by expectations of a more dovish stance from global central banks and a stabilization essentially tech sector. The rally has been particularly impactful for XRP, which is outperforming several other large cap assets as essentially a catalyst drive in its momentum. Now, to be fair, there has been essentially conversations said in the past that XRP is going to be the one that's going to be leading everything 2026. These are not my words, but they kind of are as well. But they're not my words. CNBC Squashbox at the beginning of the year said this is not Bitcoin's year, this is not Ethereum's year, this is XRP's year. Everybody can remember that. But anyways, let's talk about essentially some mini bullet points that everybody should be essentially aware of, you could say. Legal and regulatory clarity. Ongoing positive developments regarding the legal state of XRP have bolstered investor confidence, leading to increased accumulation by both retail and institutional essentially whales. Institutional partnership. Recent announcements concerning the deployment of XRP for cross-border payment corridors in Asia have reinforced the asset's real-world utility, making it a focal point in the essentially current utility era title that we're experiencing right now. What this year is being known as is the integration, foundational, regulatory foothold, and also the utility era. Yesterday, I shared news essentially to everybody that not only is XRP in terms of SPI holdings is going to be used essentially for their tokenization project, which is around $69 million. And then on the same day, essentially, Dubai also introduced that they're going to put $5 million in tokenization project with XRP. But also yesterday, it was announced essentially that Japan and South Korea are going to be using XRP as the middleman for cross-border payments, which is exactly what essentially XRP was designed for, to be a middleman between cross-border payments. So that has also helped XRP do certain high rises today, you could pretty much say. Ongoing essentially chain activity, a spike in active addresses and transaction volume on the XRP ledger also indicates growing network adoption, which often essentially serves as a leading indicator for sustained price appreciation. Market analysts believe that today's green candles represent more than just a temporary bounce, pointing towards a fundamental realignment of the crypto market and traditional financial space. As Ethereum benefits from the growing real-world asset tokenization trend and Bitcoin maintains its status as somewhat of a digital gold, the combined strength of these leaders is creating a halo effect for the entire ecosystem. If the current volume holds, the market may be looking at a multi-week trend that could challenge the yearly highs set earlier in 2026, further cementing blockchain technology's role in the global financial supercycle. So what's been discussed right now is that the market is going to be doing exceptionally well going forward, is what's been suggested right now. Now, we do also have to consider the fact that we are on the glimpse of a war essentially pretty much happening as well. Now, as I've said, there are two outcomes for this war, not on the basis of if it's going to happen or not. By the looks of it, it is going to happen. But on the outcome, essentially, that one second. Miles, did you block me on YouTube? My comments aren't coming up. No, I haven't blocked you on YouTube, and that is very, very odd. I haven't blocked you at all on YouTube. I could take a look at it after this live show if that happened by accident, but I haven't blocked you at all. Sorry about that, Shelly. Use X for now, but that is very, very odd. And good to see you. Morning as well. Now, very odd. Sorry about that if you're experiencing it. On the basis that we still do have essentially two outcomes, which is this war happening. Iran could also be using crypto as a scapegoat pretty much to move their government money around, which could boost the crypto market space, but also the other outcome where this war could, shock the market spaces, 24/7 market spaces. The first one to essentially, experience the volatility, and it could potentially bring the market down. However, right now, the crypto space is looking good. Tech stocks are looking good. Crypto's looking good. huge amount of short liquid, essentially short positions were liquidated also. That needed to happen, which is also another factor why the market's boosting right now. So there's a lot of positivity going around, especially for XRP, with one of the biggest announcements yesterday that I shared, that XRP is going to be used as a middleman between essentially Japan and also South Korea. Now, putting that to one side, there's a lot of things happening on an international scale, you could pretty much say, inside the crypto sector. The first one I'm going to talk about is Hong Kong. Hong Kong to essentially link new digital bond platforms with regional tokenization hubs. Hong Kong is set to launch a new digital asset platform, essentially Hong Kong is set to launch a new digital asset platform in the second half of 2026 to support the issuance and settlements of tokenized bonds. Financial Security Paul Chan announced the initiative during his essentially budget speech that happened today, revealing that the platform will be managed by the CMU, essentially Omni Clear, a subsidiary of the Hong Kong Monetary Authority. This move signals a transition from a one-off pilot project to a permanent core market, essentially project and infrastructure designed to consolidate the city's role as a leading global hub for digital assets and fixed income products. Why is this different to any of the tokenization project out there? Well, it's because it's like if the SEC came out and said, we're going to be starting a tokenization project. Imagine the scale. Imagine the rocket fire fuel that's going to be happening inside the crypto space if the SEC comes out tomorrow and goes, yeah, we're going to start our own tokenization project for the blockchain sector. Of course, it's going to be extremely positive, and why it's so different to a crypto company coming out and saying we're a tokenization project. Nothing wrong with that. Absolutely amazing. Or JP Morgan coming out. Absolutely amazing. But if the SEC comes out and says we're going to start doing a tokenization project for the crypto space, that is huge acceptance by the SEC, which is extremely positive. So that's why this one's very different. It's not a Hong Kong firm coming out of nowhere trying to get a license to do tokenization. This is the Hong Kong Monetary Authority essentially pretty much being the backbone, you could say, of this new platform. Regional essentially, and the new platform is expected to serve as a bridge between traditional finance and the utility era, essentially what's been described as this year, with several strict objectives. Regional connectivity. The system will be linked with other tokenization platforms across the Asian region, fostering interoperability and allowing for seamless cross-border settlements of digital securities. Expansion of asset classes. While initially focused on bonds, the infrastructure is designed to eventually support a wider range of digital assets, including real-world assets and tokenized deposits. Institutional integration. By housing essentially the platform within the Central Money Markets Unit, CMU, the government is providing the regulatory and operational security required by large-scale institutional investors to participate in an on-chain essentially debt markets. In addition to the bond market, Chan confirmed that Hong Kong will issue its first batch of fiat reference stablecoin licensing in March 2026. Further essentially deepening the territory's digital finance ecosystem, the government also plans to introduce new legislations for digital asset dealers and custodians later this year, alongside tax incentives for family offices investing in digital assets. These measures, combined with the successful issuance of a record $1.28 billion in tokenized green bonds last quarter, position Hong Kong at the forefront of the global effort to modernize capital markets through blockchain technology. This is huge news, by the way, coming out of Hong Kong, that the Monetary Authority of Hong Kong is pretty much the backbone of this tokenization platform right now, trying to connect everything essentially in terms of a digital aspect and traditional markets together through the Hong Kong Monetary Authority. This is pretty much what BlackRock, you could say, was talking about. We know if the Asian market space enters the crypto space, just 1% is around $2 trillion. Imagine what the rest is going to be. Imagine what, 5%, 10%, 20%, 100%, or whatever it's going to be. But it seems like Hong Kong is really, really aiming for that title of essentially the hub of essentially digital currencies, which is what America's trying to earn, which is what the UAE is trying to do, which is what the UK is planning on doing, apparently in their own dreams, because we don't see any signs of that, but also what the EU is trying to do as well. Now, moving on essentially from Hong Kong, let's talk about universities. Before we talk about universities, and it is relatable to cryptocurrencies, let's go inside the comment section first. Let's see what's happening there, and then we go straight into the next news. It's all positive news today, I'll be very honest with you. Majorly positive. There's one bad egg, but the rest are majorly positive. Let's go inside the comment section first. Let's see what's happening there, straight into the next news. We were here. XRP and XLM is moving powerfully in front of us. Let's go CMF facts. Let's go Scott. Miles, do you see XRP going up by June? Hell yes. I mean, there shouldn't be anything stopping it by then. It's a while. Good evening, Miles. How you doing? Let's go Cali. Good to see you as well. And Miles is blocking YouTube. Comments. No, I really didn't. I'll be honest. They are now all good. Very strange morning. All. Let's go. Mike, good to see you. Let's go. What assets will benefit from the Hong Kong plan? Good question. What crypto assets will benefit from Hong Kong's plan? Any crypto asset is legitimate that has licenses in Hong Kong and also essentially is a part of tokenizations. So projects, essentially that have license to operate. Ripple has a license to operate. So there are a few projects that have licenses to operate. Any crypto project that has a license to operate in Hong Kong in terms of essentially stablecoins, tokenizations, or anything to do with crypto, any sort of licensings, they're pretty much good to go. There's a green light. Any project that has a license has a green light pretty much once this tokenization feature kicks off. First, they're doing your traditional finance, then they're connecting tokenization. But exceptional news. But we also do know that Ripple has a license as well. Now, moving on to universities. University endowments essentially eye crypto allocations aimed challenging traditional market outlooks. Universities essentially do also have portfolios for their establishments, and typically in their portfolios is the typical stocks you would see and find. Now, however, universities are seeing crypto assets as the next viable market space they want to jump into. Major university endowments are increasingly looking towards digital asset allocations. As traditional investment vehicles face tougher return outlooks for the remainder of 2026, universities are seeing crypto as the next big bet in 2026 than traditional essentially assets. According to an industry report today, several high-profile institutional funds are reconsidering their conservative stance in response to diminishing yields in the bond market and overextending valuations in public entities. By shifting a portion of their multi-billion dollar portfolios into cryptocurrencies, these institutions hope to find non-correlated returns that can sustain their long-term spending requirements and essentially research grants. So not only are these universities, top universities essentially, not only they're thinking about moving away from traditional assets and going towards cryptocurrencies for their portfolios, but they're also thinking about we can add crypto to our portfolio and remove some traditional assets and at the same time research into cryptocurrencies as well, invest into them and research into them. Amazing. This shift is essentially in institutional strategies being fueled by the new level of comfort, which essentially is utility era, infrastructure and regulatory environments. Everybody's talking about this year being the utility era, even universities. Diversification mandates. Investment committees are viewing digital assets as a necessary hedge against the persistent inflationary pressures and the potential stagnation of legacies of 60 to 40% portfolio models. Custodial maturation. The availability of institutional grade sub custody solutions from major Wall Street banks has removed the primary technical and security hurdles that previously prevented large scale endowment participations. What they mean by that is, before, if these large educational, essentially, institutions, universities wanted to invest into cryptocurrencies and add it to their portfolios, they had their doubts because before their only options were Binance, Coinbase, Crypto.com, Kraken, and a few other ones. And there's nothing wrong with those crypto exchanges in our eyes. But then in their eyes, there was everything wrong with it. However, now with essentially JP Morgan, BNY Mellon, Goldman Sachs, Franklin Templeton, and a few other ones offering custody services for crypto assets, now these universities feel safe entering the crypto space and using these major behemoths as essentially their custody platform. That's they're comfortable with. So it's actually, these behemoths being inside the crypto space has opened more doors of liquidity for us. Tokenized yields. Beyond simple price appreciation and endowments or exploring tokenized money market funds and real world assets to capture on chain yields and currently outperform traditional short term instruments. Analysts also suggest that not essentially that even a minor allocation shift from the world's largest university funds could result in tens of billions of dollars in new liquidity entering the crypto ecosystem. This trend follows the successful integration of digital assets by pension funds and sovereign wealth funds earlier in the year. further legitimizing blockchain as a core asset class, as these essentially prestigious academic institutions move towards a permanent allocation. The broader market anticipates a domino effect that could lead to widespread institutional adoption across the entire education sector. So imagine it starts off with essentially, it starts off with a few huge universities, and then it leads to every university adding crypto to their portfolio. We are talking about tens of billions of dollars with a few. Imagine the rest. Now, moving on from universities thinking about their next investment, which is going to be cryptocurrencies, to the UK and the US. The UK and the US moved towards a landmark crypto oversight partnership aimed easing regulatory tensions. The United Kingdom and the United States are reportedly entering a new phase of a cooperation to synchronize their regulatory frameworks for the digital asset market. Now, we've talked about the UK and the US. We even had Trump come to the UK and have discussions with Keir Starmer, where Keir Starmer was embarrassed for lying on every question essentially he was asked by the British public. But putting that to one side, with Trump coming over was the first indications that the UK essentially and the United States are going to be doing some sort of contracts. And they talked about this billion-dollar tech deal that the UK is thinking about doing with the US. And then we had announcements of the UK and the US digital sandbox, which is essentially, simplest way to put it, a box, you could say, that essentially two countries like the UK and the US are going to be using in between themselves to test out blockchain projects to see which one passes their tests. And then essentially that blockchain project could be used on a wider scale within their own jurisdictions. It's like a text box, essentially. Moving on from that, the newest announcement, essentially what's going around, is that there's going to be more partnership happening between the UK and the US in terms of the blockchain sector or the AI sector and so on. So according to a report by the Financial Times today, the UK Chancellor, Rachel Reeves, who is extremely unpopular, and US Treasury Secretary Scott Benson, essentially, who is very popular in the US compared to Rachel Reeves, held a high-level discussion aimed at aligning oversight standards to foster innovation while maintaining financial stability. Essentially, there's this meeting, which essentially concluded executives from Ripple, Coinbase, and Circle, signals essentially a strategic essentially pivot towards creating a unified digital asset bridge that could essentially define the rules for the next generation of global financial plumbing. The collaboration comes as the industry essentially pushes for more concrete integration of stablecoins and tokenized assets into existing trade essentially agreements. The discussions focused on incorporating stablecoins and real-world asset tokenization into the US and UK tech bridge, an initiative designed to accelerate cooperation on emerging technologies like AI and blockchain. XRP and cross-border utility. Ripple's presence at the meeting underscores the growing essential importance of the XRP ledger in government-led essentially discussions regarding low-cost, high-speed international settlement systems between the two nations. Harmonized standards. Both governments are seeking to move away from regulation by enforcement model that dominated previous years, instead focusing on pro-growth frameworks that protects consumers without stifling the utility era. Analysts suggest that this is essentially warming of the relations between the world's two largest financial hubs in a direct response to the global competition for blockchain dominance. By establishing a shared set of rules, the UK and the US aim to solidify their position as the primary destinations for institutional capital and digital entrepreneurship. As the market eyes a $2 trillion stablecoin cap and the final resolution of a long-standing legal disputes, this joint effort is expected to provide the legal essentially certainty necessary for the widespread adoption essentially of digital assets by the world's largest banking institutions. So, the UK and the US are once again having discussions regarding blockchain and AI. And who was at the meeting? Obviously, Ripple, Coinbase, and a few other ones were at the meeting as well. But also does show you essentially who's important when it comes to blockchain, and Ripple's very important, but so is also Coinbase as well. Now, amazing. Honestly, the UK and the US once again having discussions. Maybe we could finally see something happen in the UK in terms of blockchain, because we keep on hearing words but no action when it comes to British government in terms of blockchain technology. But other than less, amazing, very positive. Let's see essentially what goes on as we move forward. Now, also sticking to the UK government, the UK government accused Going from positive to slightly negative, the UK government accused of picking winners for digital pound infrastructure as Coinbase CEO critiques their strategy. So, also the UK is very big on the idea of CBDCs. They might, be struggling to create crypto regulations, but they are definitely moving forward with CBDCs. And Coinbase wanted to criticize the UK, you could pretty much say, for picking and choosing who essentially is a part of them. Now, you might be thinking to yourself, why is Coinbase critiquing essentially the UK on picking and choosing when it comes to who essentially is behind their CBDCs and so on? Is it because Coinbase wasn't chosen? Yes. Is it also because no other blockchain project was chosen? Somewhat, yes. Coinbase is critiquing essentially the UK because they're choosing financial establishments rather than blockchain projects. Now, let me explain. So, the UK government is facing backlash over its approach to developing a central bank digital currency, CBDC, with critics essentially alleging that officials are unfairly picking winners among established financial giants. This controversy comes as the Treasury and the Bank of England accelerate their roadmap essentially for a digital pound. Just to repeat that one more time, the Bank of England is accelerating for a CBDC, basically a digital pound, and focusing on a narrow group of traditional banks and vetted infrastructure providers to lead the pilot phase. While the government maintains this essentially ensures stability and security, industry leaders argue that the exclusion of native digital asset firms stifles competition and contradicts the UK's ambition to become a global crypto hub. The strategy has drawn essentially a sharp response from Coinbase's CEO Brian Armstrong, who has publicly questioned the transparency of the selection process. Exclusion of crypto natives. Armstrong noted that the UK's preference for legacy institutions overlooks the expertise of companies that have spent over a decade building and scalable secure blockchain infrastructure. Innovation stifling. Critics argue that by favoring a closed loop system dominated by traditional players, the UK risks on creating a wallowed garden that lacks the interoperability and innovation seen in the broader utility era ecosystem. What they're essentially talking about is that the UK has chosen traditional financial banks to be essentially one of the backbones, you could say, of their CBDC. And Coinbase is arguing that is wrong because those traditional finances don't understand really what blockchain is, but we do. Coinbase is saying companies like us understand what blockchain is. We essentially research, we develop, we have more skin in the game than any other bank out there when it comes to blockchain technology. And that the UK closing itself just with banks and trying to do a CBDC will end bad for them. And it goes against the whole idea of the UK being this innovative place if they're just going to stick with traditional financial, especially banks, to do a CBDC with. Now, there's more to that story than meets the eye. And the other thing is, Ripple is a partner of those traditional banks. Coinbase isn't. You see, while Ripple was being sued by the SEC and Ripple decided to go international, Coinbase didn't go international, but Ripple did. And when Ripple went international, they partnered with Santander Bank, they partnered with HSBC Bank, they partnered with essentially Lloyd's Bank. You get the picture. The banks that are involved, especially HSBC that was chosen for the gilt essentially project for tokenized gilts essentially for the UK, which is a big step for the UK, is a Ripple partner. Whereas Coinbase doesn't have that much skin in the game compared to the essentially what Ripple has when it comes to traditional banks and essentially companies out there. At the time, Ripple was struggling to get US banks on board or essentially, US companies on board while being sued on the early days essentially of the SEC case. But Ripple didn't struggle going international because everybody else pretty much partnered with them everywhere around the world. So I could see where Coinbase is coming in from. I could see the critics Brian Armstrong is throwing out there. That blockchain companies should also be coming to the table, and not just traditional banks. But look, Ripple played the game good compared to how Coinbase played it. The easiest way to put it. Ripple is partnered with the banks sitting at the table on CBDCs and everything else. Coinbase is not partnered with any of those banks. So Yes, I get the idea, blockchain companies should be sitting at that table too because they have a better understanding. But also look at who's behind those banks that are sitting at the table. It's Ripple. All of those banks are saying behind them is Ripple. Competitive disadvantage. There are growing concerns that this restrictive approach may push talent developers and capital towards jurisdictions like the EU and the UAE. So Coinbase is pretty much saying to the UK, look, if you're going to close your doors to blockchain companies and only use traditional banks for everything inside a digital space, then all these blockchain companies are going to move away from the UK. I'll be honest. Let me say one thing to Brian Armstrong. I know that he doesn't watch my live shows at all, but I don't know if members of Coinbase, essentially employees, watch this live show. I'll be honest. Brian Armstrong, or Coinbase employees, because I have had, essentially Binance employees watch this live show before. They all join by, random usernames. So I don't know if they're employees or not. Later on, I find out when I receive an email from them. I've received emails from MEXC Exchange and Kraken as well. So many. Um, Here's the thing. The UK's biggest issue isn't that they're blocking you from sitting on a table, and that if they do this, then all these blockchain companies are going to leave the UK. There's a bigger mess happening in the UK. Okay, we have a much more bigger mess happening in the UK, and it starts with taxes and everything else. So you might be thinking to yourself, Brian Armstrong, telling the UK, it's unfair that, you're not bringing blockchain companies to the table. Blockchain companies will leave the UK. Already, too many people are leaving the UK. And there's too many successful people leaving the UK in terms of billionaires or millionaires or company CEOs. We even have an entire bank, Revolut Bank, moving their headquarters to the UAE. This was before you ever made this speech of you're going to lose talent. What we're experiencing in the UK is what people were experiencing on the Biden administration in the US, when it just looked like Biden's administration hated America so much that they were just damaging everything to do with it. And then Trump obviously came in, loves America, and so on. That's what we're experiencing in the UK. The people that are leading this country hate the United Kingdom, essentially. They hate everybody inside of it. They might show that they don't, but the reality of it is we're losing millionaires and billionaires at a record high. We're losing entrepreneurs at a record high. We're losing CEOs at a record high. As I mentioned, we're losing an entire bank, and it's shifting over to the UAE. So if you thought your comment of, telling the UK you're going to lose blockchain companies to the UAE, it doesn't do much for them because they're already losing that before you even made that speech. And that's the sad reality of it. So what people were experiencing on the Biden's administration is what we're experiencing in the UK right now. So if you thought that comment was going to make the UK think to themselves, maybe Coinbase Brian Armstrong is right. We're going to lose innovative entrepreneurs. They couldn't care less because they're already losing innovative entrepreneurs and they still don't care, which is a shame that they don't care, is what I'm trying to say. Now, despite the outcry, the UK policymakers insist that the phased approach is necessary to mitigate systematic risk to the nation's monetary policy. Their focus remains on integrating essentially digital pounds with existing real-time gross settlement systems to ensure it can essentially support high-level institutional use cases from day one. As the debate essentially testifies, the outcome of these pilots will likely determine whether the UK can successfully bridge the gap between traditional finance and a decentralized future, or if its essentially rigid and selection process essentially will leave it to trailing behind more open digital economies. Either way, the UK finally taking more steps inside the blockchain sector, even if it is with traditional banks, but you just have to look at who the partners of those traditional banks are, which all of them are pretty much Ripple. Now, moving on essentially from Brian Armstrong saying that the UK is being unfair to, which I agree with 100%, by the way, the UK is definitely being unfair, 100%. And what they're doing is wrong, and what Brian Armstrong said is right. 100%. What he said is right. Now, the Dutch is what we're going to talk about next. So, if you thought Brian Armstrong saying that UK is in the wrong for essentially kicking out their innovators, I bet you I can beat that with this one. The Dutch government has announced plans. So, if you are a member, a citizen of Dutchland in the EU, the Dutch government has announced plans to amend a controversial tax proposal that would impose 36% tax on unrealized crypto gains. 36% tax on crypto. Finance Minister Elko essentially admitted that something simply went wrong with the legislation, which was originally approved by the House of Representatives earlier this month. The proposed actual return in Box 3 Act would have required investors to pay taxes on the value increases of their digital assets, even if they had not sold them. So you thought it was, the UK losing innovators was bad. Deutschland was thinking about, and still is thinking about, taxing crypto users 36%, even if they don't sell. I told you it could get worse. Investors to pay taxes on values increase of their digital assets, even if they had not sold them, a move that drew a sharp criticism from both the crypto industry and global tech leaders. The primary concern, essentially cited by critics and the finance minister, was the potential for investors to face a massive tax bill on assets that might crash shortly after a period of growth, leading to situations essentially where taxpayers owe money on investments that ultimately resulted in losses. This legislative reversal is seen as a significant win for Dutch crypto community. So essentially, they're coming to their senses and they're thinking about backtrack. Now, there are a few essential politicians in Deutschland who have IQs of fishes still, thinking, yes, 36% tax, it should happen. But now there's a backtrack happening where they think to themselves, maybe it was a stupid idea to introduce, 36% tax, even if you don't sell. As taxing unrealized gains at such a high rate is largely unprecedented globally, the minister has stated that he intends to return the drawing board to the collaborative with both chambers of parliament on more balanced approaches. So, in other words, everybody go back to the drawing board and come up with a better law. While the original law was not set to take effect until January 1st, 2028, the decision to seek amendments now provides much needed clarity for the utility era of the Dutch financial market. So why is, Deutschland coming to the consensus of maybe, this was a bad idea? Because we're in the utility era. Which means if Deutschland's government is ever going to be seeing a single penny from their crypto citizens, they have to get rid of that stupid law before January 1st comes around 2028, essentially. Because if we're going to go into the utility era, then we should be expecting more investments coming in for all these countries that accept cryptocurrencies and blockchain companies and AI tech companies and so on. And if they're thinking about introducing such a stupid law down the line, then people are just going to pack up their things inside the crypto sector and move from Deutschland, in other words, which is going to make essentially them lose a tremendous amount of essentially money that they could potentially, tax later on. So it's all because of the utility era. Ongoing struggle governments facing balancing tax revenue essentially with the need to foster a competitive environment for digital entrepreneurs and capital. By addressing these concerns early, the Dutch government aims to avoid driving wealth and innovation out of the country now as the global competition for blockchain leadership intensifies. So it's good that they, came to their senses essentially, but let's see if they can actually come to their senses with something on paper. Now, moving on essentially from Deutschland to South Korea. As I said, there's a bit of an international crypto news to go from tonight's live. South Korea is preparing new legislations that would require social media influencers promoting cryptocurrencies and stocks to disclose their financial holdings and compensation received for their promotions. This is going to make a lot of crypto influencers disappear in South Korea. Not as in like they'll disappear, but as in like they'll stop being a crypto influencer. So, France was the first country that introduced the idea that if you are a crypto influencer, you have to pass a test to see if you understand crypto before you start, talking about crypto on videos and telling people what to do, because they're considering it as financial advice. But you can obviously say, you can say, obviously, not financial advice. And it also does depend on what you do inside the crypto space. So if you are somebody that sells a course, let's say, inside a crypto space, then you are somebody technically providing financial advice. Even if you write on your documents, not financial advice, you're still providing financial advice by selling that course to people. So France was the first one to introduce the idea of if you're a crypto influencer, you have to pass a test to show that you actually understand crypto before you talk about it, which I thought was a brilliant idea, 100%. And if you're a crypto influencer, you should at least understand what you're talking about, because there's too many fake crypto influencers that are just pushing random projects to fill their own bags onto their user base, and their user base sometimes still follow them, even though they've been scammed by the same influencer about 20 times. I'm not going to name who these people are, but put that to one side. South Korea has took another step forward. So France starting with if you're crypto influencer, pass the test to see if you understand it. South Korea took one more step ahead. They said if you're a crypto influencer, not only the test scenario, but also you have to show us your crypto portfolio. If you're a crypto influencer, you have to show us your crypto portfolio and you have to show us who is giving you money in the crypto scene essentially and telling you to promote what. This would also stop scam promoting. And what I mean by that is rug pulls. There's too many crypto influencers over the past years that have made too much money by rug pulling their own users. Some went on the length of, essentially changing their names. Some came back and decided to do different types of videos. I'm not going to name who these people are, but essentially, um, South Korea just took another step forward. This is going to make a lot of crypto influencers overnight pack up their bags and get off social media, which will only leave the legitimate crypto influencers out there, and the fake ones will disappear. And if anybody ever thinks about rug pulling their essentially followers ever again in South Korea, it could probably lead to essentially prison sentence and a massive fine. The bill drafted by lawmaker essentially Kim Soon-won targets fin influencers, they're calling it financial influencers, fin influencers, who offer investment advice to the public without a formal license. Under the proposed amendments, individuals repeatedly providing guidance through online platforms or broadcasts must reveal the type of quantity of assets they personally hold, as well as essentially the payments they accepted for their endorsements. In other words, if you're a crypto influencer being paid off by a crypto project, you have to come forward and say, I'm being paid off essentially by this crypto project. You have to come forward and say that. If you don't come forward and say to the whole world that this crypto company is paying you to say these words, then it could be seen essentially as fraud type of behavior, a massive fine, and a possible prison sentence, you could even say somewhere down the line. The move comes in response to a dramatic surge in complaints regarding investment advisors. So they're not doing, South Korea is not just doing this randomly. They're not just coming out with randomly, going, we should crack down on crypto influencers. They're doing it because too many people got rug pulled by the influencers they follow inside the crypto sector in South Korea. So the move comes in response to a dramatic surge in complaints regarding investment advisors, with reports in South Korea jumping from 132 in 2018 to over 1,700 in 2024 and beyond. Lawmakers argue that these unregulated personalities have caused significant financial harm to retail investors by operating from positions of major public influences without transparency. To deteriorate essentially misconduct, the bill proposes penalties that could be as severe as those for essentially market manipulation or insider trading, making a strict shift in how the country handles undisclosed financial promotions. So if you are caught lying to your follower base and rug pulling them later on in a crypto scam, then you're going to be in the same category in terms of a prison, as you can pretty much say, as someone who did insider trading or fraud. This legislative push aligns with a growing global trend of crackdowns on influencers driven essentially financial markets. Now, if you thought to yourself, well, this is only in South Korea, what's the relevance if you're living somewhere else? Well, it's not just in South Korea. It's essentially going to be happening in the UK, the US, and the European Union. So it's not just South Korea that's cracking down on crypto influencers who are rug pulling their followers. This is something that the UK, the US, and the European Union is going to also be cracking down on crypto influencers who are rug pulling their essentially user base. As a part of a broader utility era transition in 2026, regulators are increasingly focused on protecting retail participants from these practices in the digital asset space. By mandating transparency, South Korea aims to ensure that the growing agent economy and social media investment landscapes operate within a framework of accountability and similar to traditional financial markets. Honestly, I agree with it 100%. being transparent. If you're a crypto influencer, first you must know what you're talking about. If you're a crypto influencer, you must understand essential blockchain technology and any projects that you're talking about. Second, if you're a crypto influencer and you're promoting a crypto project and you're saying this project is great, everybody go and buy it, and so on, then you should tell your followers this project is actually paying you money to promote it. And third, if you rug pull your followers, in my point of view, you should be in prison. I would give out, honestly, there's a reason that I will never become president of any country. And I'm not saying this, because cocky or gloating or whatever. There's a reason why I would never become a president of any country, because I would have very, very strict, harsh rules for thieves and criminals. If I was in charge of a country and there were crypto influencers essentially, rug pulling their user on purpose, they were just rug pulling their followers on purpose, I would give out life sentencing. I'm not even joking. As you can see, I'm, a Christian. I believe in Jesus. I believe in Jesus. I'm a Christian, and I believe in God. I swear to God, I would give out life sentencing to any crypto influencer that rug pulled their following base. Not even joking. And the first life sentence I would give, it would stop the rest of the crypto influencers from rug pulling their users. I'm not even joking about that one either. The first life sentence I would give to any crypto influencer, essentially, who rug pulled their followers, it would stop the rest of the crypto influencers from ever even thinking twice about rug pulling their user base. But there's a reason I know I will never become president of any country. Some might consider that too harsh, but trust me, it would stop a lot of heartache. Too many people have lost their homes, their jobs, and their families because they got rug pulled by crypto influencers. I'm not even joking. The first life sentence I give, it will stop the rest of them. Now, because it's not right what they do, because people come to the crypto space inside the retail section for a better life. It could be a husband, it could be a wife, it could be a mother, it could be a father. They're coming to the crypto space to create a better life for their family. Inside the CMF, I have so many families inside the CMF who are all trying to make a better life for their kids, future, and so on. And it's hard to see people like that getting rug pulled. It's just not right. When a mother is trying to create a better life for their children by investing into crypto, but when a father is trying to invest in the better, so it's just not right what they do. These people that rug pull people. So I don't think it's right whatsoever. Rug pulling innocent people. I'm not even joking about that one. So if I was a leader, I would life sentence. The first life sentence I give, it would stop the rest from doing it. Now, Russia is what we're going to talk about on tonight's live next. Russia redefines crypto status and grants courts new powers to freeze digital assets, is what we'll talk about next. But before we talk about that, let's go inside the comment section first. If anybody thought that was too harsh, trust me, it isn't, because there's a lot of people inside the crypto sector who are just, in the crypto space because they're trying to create a better life for themselves and their family, and it's not right that people rug pull them. It's just not right. I'd honestly give out life sentencing. I swear to God, I will give out life sentencings. I would only have to give out one life sentence because the rest will stop after that. It'll be a domino effect of people thinking twice about rug pulling anymore. There might be one or two more idiots that would join the board, but okay, let's see where we're inside the comment section before we go through the next essentially news on tonight's live. Still can't believe sometimes the Americans really had Sleepy Joe as a president. So much damage was done by the people acting as his handlers. Just a damn shame. Weekend at Bernie's type. Yeah, honestly, 100% I agree with you, Ray. Absolutely. Good evening, Miles and CMF. Manny, good to see you. How you doing? Artistic, good to see you. How you doing? Let's go. Hi, Miles and CMF. Stormy, good to see you. How you doing? Exactly. Let's go, Stormy. Hi, Miles and the CMF family. It is good to see you. Let's go for Facts News. Let's go, Carl. Miles, I tried to send messages from YouTube to your live show, but couldn't. I don't know why. Yeah, it's Shelly couldn't either. I don't know what's happening. I'll take a look at it after the live show. Miles, I tried to props to South Korea. Too many toxic crypto influencers everywhere. I agree, 100%. France is the same situation. Large part of the businessmen are leaving France for tax reasons. Facts. Rock pools are thieves. I agree with that 100%. Yep, definitely peg. Texas against the crypto markets, encouraging startups to move to other more accommodating countries. Now, Russia. Russia redefines crypto status and grants essentially YouTube not sending. Yeah, I don't know what's happening with YouTube in terms of the comment section. It's a bit odd. I'll take a look at it after this live show. The server is still connected for YouTube. It's just the comment section is not working. Now, the Russian government essentially is about to do something interesting because the whole idea and concept about Bitcoin is that essentially nobody controls it and nobody's in control of it. And then if you own Bitcoin, you're pretty much anonymous for your entire lifetime, and that nobody can freeze your wallet and freeze your assets and so on. But Russia is essentially going to be freezing Bitcoin wallets. So let me explain what they mean exactly by that. The Russian government has officially redefined the legal status of cryptocurrencies, classifying them as property for tax and inheritance purposes, while simultaneously expanding judicial authority over digital wallets. According to a report on February 25th, 2026, new legislative amendments grants Russian courts the essentially explicit power to freeze Bitcoin and other digital assets held on centralized exchanges and domestic platforms. Essentially, this move is a part of a broader effort to integrate digital assets into the national legal framework while tightening essentially the state's grip on financial flows to combat money laundering and tax evasion. You know what's interesting and quite funny about that? Russia is saying, money laundering is bad, tax evasion is bad, and so on. But they're the ones using crypto to avoid sanctions, which, makes sense. As a country that's sanctioned, it still needs to do business. But that's also considered money laundering. So there's a bit of an irony in the idea that Russia is thinking about freezing crypto wallets because of money laundering purposes when it comes to crypto platforms, but also Russia's money laundering too. The new regulations establish a clear set of procedures for how the state interacts with the digital economy. Property classification. By legally defining crypto as a property, the government has cleared the path for digital assets to be used as collateral for loans and to be formally essentially included in bankruptcy proceedings and inheritance claims. Enforcement essentially mechanisms. The law mandates that the local service providers must comply with court-ordered freezes within 24 hours, providing law enforcement with streamlined mechanisms to halt the movement of tainted or disputed funds. Taxation clarity. The redefinition essentially simplifies the reporting process for Russian citizens who are now required to disclose holdings above certain thresholds, aligning the country with emerging global standards in the utility era. And once again, if you're thinking to yourself, what's the relevance if you don't live in Russia, for example? Well, it's not just Russia who's thinking about using crypto exchanges to freeze people's assets if they don't pay their taxes. Other countries are also thinking about doing something similar if you don't pay your crypto taxes and you hold your crypto on crypto exchanges. They haven't introduced it, but there has been discussions essentially made, you could pretty much say, which is always better to hold crypto assets, not financial advice whatsoever, but it is always better to hold crypto assets in cold storage wallets, in my opinion. Now, preferred cold storage wallet for me is always going to be Tangent, but Ledger is also good as well. Now, real world assets is what we're going to talk about next on tonight's live, and there's something quietly but huge happening in that sector. Real world assets market cap surges past $15 billion. The market capitalization for tokenized real-world assets has officially crossed the $15 billion milestone, marking a historical high essentially for the sector in February 2026. This surge is being driven by essentially unprecedented influx of institutional capital into essentially an on-chain private credit, tokenized US treasuries, and commodities. As traditional financial yields essentially fluctuate, investors are increasingly turning to decentralized finance and such DeFi platforms to access the transparency and 24/7 liquidity that tokenization provides, effectively moving real-world assets from a niche experimental phase into a mainstream utility era. The rapid expansion of this sector is reshaping the landscape of modern investments and blockchain utility. Institutional demand, major asset managers and university endowments, as we talked about, essentially, are thinking about capturing the essentially and entering the crypto market space as we talk about it. The growth has been essentially bolstered by the success of protocols that bridge real world essentially revenue, such as real world assets, essentially real estate rentals, and trade finance directly into DeFi liquidity pools. Network specialization, high performance also essentially blockchains, including XRP Ledger and Ethereum Layer 2s, are seeing record transaction volumes as they become the preferred infrastructure essentially for settling these high value digital securities. So, there's something quietly but also massive happening tokenization. There's an influx of billions entering essentially tokenization, millions to billions entering tokenizations, essentially projects. XRP, by the way, is leading up to a certain extent when it comes to tokenization, essentially, as well. Just want to put that out there. There's an article about 65% essentially. It's leading the way essentially when it comes to tokenization. But now, putting that to one side, that tokenization market space is doing exceptionally well for itself, very quietly, but doing very well for itself. On the topic of XRP jumps 6%, as essentially now it's up by 8%, 9%, you could even say, as exchange data points to significant institutional accumulation. So if you think yourself, today, Bitcoin up, Ethereum is up, XRP is up, everything's pretty much up. There are certain tokens leading the way. And if you want to know the reason of, for example, out of all those tokens, why was XRP doing exceptionally well alongside everything else? Well, it seems like institutional accumulation is why XRP was doing pretty damn well for itself. XRP has surged essentially tremendously well today, outperforming the broader cryptocurrency market as traders react to an on-chain metric suggesting a heavy wave of institutional buying. Data from major exchanges indicate a sharp increase in whale wallet activity and large-scale outflows from trading platforms into private custody, a classic signal of long-term accumulation. This price action comes at a critical time as the digital asset market looks to stabilize, with XRP emerging as a primary beneficiary of renowned capital inflows targeting high-utility protocols. The recent spike in demand is being attributed to several key factors that highlight the growing role of the XRP ledger in the current financial ecosystem. Institutional pivot. Analysts note that the volume of block trades has reached a multi-month high, suggesting that hedge essentially funds and family offices are positioning themselves ahead of anticipated regulatory milestones. Liquidity growth. The increase in price is supported by deepening liquidity on institutional grade platforms, which has allowed for larger buy orders without the significant slippage often seen in more essentially volatile assets. Utility area adoption. The jump essentially in XRP is also being linked to the continued expansion of the XRP based payment corridors in Asia and Europe, reinforcing essentially the asset's reputation as a fractional bridge for global finance. As XRP maintains its upward trajectory, market participants are closely watching for a breakout above key technical resistance levels that have been held firm since early 2026. The shift essentially from retail speculation to institutional accumulation is what's happening right now, is seen as a maturing phase for the asset and potentially providing a more stable floor for future price appreciation. And essentially that $2 trillion enter the market space. So if you want to yourself essentially why XRP is doing so well for itself today alongside everything else, why it did better than the rest, is because it's not retail that's mostly buying XRP essentially today, it's institutions that are actually buying XRP today. And also to add a little bit more on that, the Clarity Act also providing a clearer backdrop, XRP essentially appears well positioned to remain a leader in the ongoing integration of blockchain technology into the global banking plumbing. As CNBC Squashbox said, it's not essentially Bitcoin's year, it's not Ethereum's year, it's XRP's year this year. Now, sticking on XRP, former Ripple's CTO, David Schwartz, debunks claims of absolute control of XRP Ledger. So, as you know, there's still, even in 2026, even when we're hearing announcements from SBI essentially, talking about Ripple doing tokenization on Ripple. We hear announcements of South Korea, essentially in Japan, doing cross-border, about to be somewhere down the line doing cross-border payments of XRP, and everything else that Ripple has achieved and brought out. And Ripple's saying XRP plays the heart of Ripple's essentially operations, even though a long time ago, crypto influencers that hated XRP or people that hated XRP and still do, which makes no sense, that still, don't agree that, Ripple is, XRP is the heart of Ripple, even though you have Ripple's CEO saying it's the heart of Ripple, but a random person online still thinks it isn't. The other topic on XRP has always been that Ripple controls everything and that XRP is not decentralized whatsoever. That the XRP ledger is not decentralized. Well, a former Ripple chief technology officer, essentially Stephen Thomas, has publicly essentially addressed reoccurring allegations that Ripple Labs maintains absolute control over the XRP ledger. In recent statements, Thomas dismissed these claims as non-cynical, emphasizing the decentralized nature of the network's consensus mechanism. He explained that because the XRP ledger relies on federated consensus models where independent validators must agree on transactions and no single essentially entity, including Ripple, has the unilateral power to reserve transactions and freeze funds or alter the ledger's fundamental rules without a supermajority of the community, the debate essentially highlights the technical distinctions that separates the XRP ledger from more centralized financial systems. In other words, the XRP ledger is not like essentially SWIFT system where they go around and essentially, they're politically motivated to sanction countries because of what a particular country tells them to do. Validator independence. Thomas pointed out that the majority of validators on the network are now operated by independent third parties, such as universities, exchanges, and financial institutions, rather than Ripple itself. And any changes to the XRP ledger code must go through a transparent amendment process, which requires an 80% support threshold from validators held for essentially consistent 2-week period, ensuring democratic oversight. And censorship resistance. The former CTO retreated that Ripple cannot turn off the ledger or block specific users as the protocol is an open source and maintained by a global community of developers and node operators. Remember when I kept on telling you, essentially the difference between the XRP ledger and being used as a financial tool rather than SWIFT is that SWIFT is not just a messaging standard, it's a political tool. When America tells them they have to, essentially sanction a particular country, SWIFT sanctions that country. Russia got sanctioned, North Korea sanctioned, Iran sanctioned, and so on. And not saying those countries didn't deserve it, but it's what it's being used for. The XRP ledger isn't. There was a reason why a tremendous amount of countries wanted to join BRICS. It wasn't because they were getting away from the slow payment system of SWIFT or the expensive payment system of SWIFT. Sure, that played a factor. What played more of a factor is those countries were also scared that one day they will become sanctioned. And those countries wouldn't have the strength that Russia has to overnight still maintain their economy. And that's why, a lot of countries decided to join BRICS. They weren't moving away from the US dollars. They were actually just shifting away from Swiss payment system that was pretty much running the show in their countries. So that essentially puts to bed the argument that the XRP ledger essentially is a centralized tool and that Ripple can just click a button and turn this blockchain off or click a button and block this user. No, it's open source. And that's the biggest difference when it comes to Swift and the XRP ledger. And some may argue Swift is, not the old Swift it was, and now it's using blockchain technology and using Chainlink and so on and so on. It's still Swift at the end of the day. And it has this bad taste that's just left behind for all these countries that wanted to join BRICS. This classification comes at a pivotal moment in the utility era as regulators and institutional partners scrutinize essentially the decentralization of major blockchain networks. By reaffirming the independence of the XRP ledger, Thomas essentially aims to build confidence among essentially banks and payment providers currently integrating the technology for cross-border settlements. As the industry moves towards greater transparency, distinction between a company's corporate influence and blockchain technical autonomy remains a critical factor for long-term institutional adoption and regulatory compliance. In other words, Ripple will always push the XRP ledger forward. Ripple will always most likely purchase more companies and expand the XRP ledger, but they never have the right to turn off somebody's wallet or essentially block one whole country, an entire country, from using the XRP ledger, which is exactly what SWIFT does. And that's the key difference. It's not that SWIFT is a messaging standard, it's a political tool. Now, also, one thing that everybody should know about, it seems like Ripple is interested in AI even more. So there's a company, T54 essentially, that's just secured seed money from Ripple and Franklin Templeton. So T54 secures $5 million essentially seed round with essentially backing from Ripple and Franklin Templeton. T54, a rising player inside the blockchain infrastructure space, has successfully closed a $5 million seed funding round led by industry giants Ripple and Franklin Templeton. This strategic investment marks a significant vote of confidence in T54's mission to bridge the gap between traditional finance and decentralized technologies. By securing capital from both a leading crypto innovator, Ripple, and a legacy global asset manager, Franklin Templeton, T54 is well positioned to accelerate the development of its specialized tools and designed to streamline institutional entry into the digital asset ecosystem. The funding round highlights the growing trend of collaborative investment between utility era and pioneers and established financial institutions. The involvement of Ripple and Franklin Templeton suggests that T54 technology may be integrated into larger cross border payments and tokenized fund initiatives, potentially also leveraging the XRP ledger because Ripple is their investor alongside Franklin Templeton. T54 plans to use capital to enhance its compliance and security features, especially targeting the needs of conservative banks and wealth managers who require enterprise grade on ramps. This seed round will facilitate the hiring of key engineering talent and expansions of T54 service across the US and European markets, where regulatory clarity is currently driving a surge in blockchain adoption. As the industry moves towards a more integrated financial plumbing system, T54's success essentially reflects the increasing appetite for middleware that simplifies blockchain complexities, and industry analysts view this investment as a signal that major players are looking to solidify their underlying infrastructure before the next wave of mass institutional adoption. With the support of Ripple and Franklin Templeton, T54 is set to become a critical component in the movement essentially to bring trillions of dollars in real world assets onto the blockchain. Because the next wave, essentially the wave that will shift slowly reaching, is a huge influx of institutional money. Just 1% of the Asian market space, $2 trillion, is essentially what we're expecting next inside the crypto space. And they're saying essentially that Ripple, alongside the behemoth Franklin Templeton, investing into this company is an indication of that they're really trying to prepare themselves for what's about to happen next, an influx of tremendous amount of liquidity. On that note, that Ripple has just made another investment towards another company alongside Franklin Templeton, we have also come to the endings of tonight's live. This was episode 448 of the CMF live show. Essentially, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. London time onwards for this recent news regarding cryptocurrency, CBDCs, AI politics, and regulations. Disclaimer of this live show, as always, not financial advice, no political advice, and whatever I say is only for entertainment purposes. So obviously, before we do go, let's go inside the comment section first. And by the way, I will check into this whole YouTube situation. It's annoying. You could you could pretty much say that we were able to, not me, but Restream with X, they were able to fix the post on the live show. So as in the post comes up now on X, just like before. So they fixed that, but somehow the YouTube situation has started now, where there's a difficulty of commenting on YouTube. But at least they fixed the post situation on X. So that's good. And now they have the YouTube comment section situation issue. So for the time being, I'm guessing use X for comments inside the live show. And I will look into a YouTube situation tonight after this live show. By the way, if you haven't liked or retweeted this live show, go and like and retweet. If you're watching this on X right now and you haven't liked or retweeted this live show, the post is on X as usual on my profile and is pinned. Like and retweet if you haven't. If you have, thank you so much. And if you watch this on YouTube, and just like the live show as well. If you haven't already, if you have, thank you so much. If you followed or subscribed during this live show as well, thank you so much, and welcome to CMF. Before we go, let's go inside the conversation first. Good night, Miles. Good night, Miles, and all the CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, at the same time as usual. Sup, Miles and CMF. Davey, good to see you, brother. How you doing? I'm out as thanks, Miles. Good night, CMF. Let's go. Stormy. See you tomorrow, same time as usual. Take care, Miles and CMF. Let's go, Ray. See you tomorrow, same time as usual as well. Thanks, Miles, for your live shows. I'm back after a long time absence. I will catch up. Let's go, Carl. See you tomorrow, same time as usual as well, brother. Sup. Let's go, Davey. See you tomorrow, Davey. Same timing as usual. Thank you a bunch, Miles, for all the news and crypto updates. Have a lovely night, all. Let's go, Lena. See you tomorrow, same time as usual as well. Thanks, Miles. Take care. All CMF all tomorrow. Shelly, see you tomorrow, same time as usual as well. Good night, Miles. Really good news this evening. Thanks. Let's go. Khalid, see you tomorrow, sometimes you as well. I'll see everybody tomorrow, same time as usual. I'm proud to be part of CMF family. Your information is all valuable. Let's go, Carl. I will see all of you tomorrow, same time as usual, same time as usual, 10 p.m. London time onwards for the next episode of CMF Live, episode 449. See everybody tomorrow, same time as usual. Everyone have a great day or a good night, depending on where you're around the world. Love you all. See you tomorrow. Well done, Miles. You're doing a great job, my friend. Let's go, Carl. See you tomorrow, but at the same time as usual. See everybody tomorrow.